Hello, everybody, and thank you for joining us for the first session of Cherry Bekaert's 2025 Not-for-Profit Virtual Conference. My name is Jeanette Schwartz. I am a partner and also the leader of Cherry Bekaert's Not-for-Profit Outsourced Accounting Services. This event is designed to deliver high-impact, industry-specific CPE content tailored for professionals in nonprofit financial accounting and reporting. You're going to gain timely insights, practical tools to drive innovation and enhance organizational agility in today's fast-changing environment. We're offering 8 sessions over 2 days, totaling 9 hours of CPE. Attendees who participate fully will receive 9 hours of CPE pending approval. Our first session offers 1 CPE credit. To receive this credit, you must attend for the full 50 minutes and answer at least 3 of the polling questions. Our first session will focus on the top 10 finance and accounting issues facing nonprofits. This dynamic game show session will explore the top 10 finance and accounting hurdles impacting not-for-profits today. Presented in a fun family feud format, we will be diving into strategic priorities, operational pressures, and future-focused risks that can hinder financial clarity and decision-making. I am going to be presenting this along with my co-speaker, Tracy Bowers, who is a managing director also in Cherry Bekaert's not-for-profit outsourced accounting services practice. Let's dive in. Tracy, over to you.
Thanks, Jeanette. Excited to be here to kick off Cherry Bekaert's not-for-profit webinar. Let's go over how this game is going to be played. We have a couple of rules. We're going to dive into the top 10 finance and accounting challenges facing nonprofit organizations. This game is going to be divided into 3 rounds and a bonus round. I want to highlight that the content and the results within this game reflect industry trends that Cherry Bekaert has seen, and also our work with current and prospective clients that we engage with on a day-to-day basis. Each round, we're going to reveal 3 issues, 3 key issues, and this is where you come in. We're going to poll the audience to see how this group compares to what we have seen in the survey. And we're going to walk through the considerations and recommendations for each of the issue, and we're going to have some fun with this. So let's see what the survey says. We've grouped these top 10 challenges into 3 categories. The first one being strategic priorities. And these are, are we using the resources in a way to support our mission? Do we have the tools to make the decisions to maintain the resources long term? These are bigger picture issues. The next round, the next category is going to be operational pressures. These are the nuts and bolts of running a finance team. They affect how efficiently and effectively your team manages the finance function. We are going to have positioning for the future. This is how are you future-proofing your operations? Are you being proactive and not reactive? This is more, forward-looking. And then we have a catch-all bonus round where anything can happen. So stay tuned for that. So let's get your buzzer fingers ready. It's time to play the feud. I think we're going to launch into our first polling question here. Which of these 3 strategic priorities represent the biggest challenge for your not-for-profit organization? Is it financial strategy alignment with mission? Is it financial reporting and transparency demands? Or is it financial sustainability and revenue uncertainty? This is your opportunity to compare to see what the survey says. Okay, interesting. So our poll showed that the biggest challenge for this group is financial sustainability and revenue uncertainty. Coming in second was financial reporting and transparency demands. And the third item is financial strategy alignment with mission. Well, as I mentioned, we're going to walk through all three of these. However, what did our survey say was the top answer here? Next slide. And that is financial reporting and transparency demands. So why do these represent such challenges to nonprofit organizations? The first is untimely financial reporting. The first thing, the main thing, the number one issue that Jeanette and I and our team hear when people walk in the door and they want to talk to us is we're not getting financial statements timely or routinely, and I don't understand why. And they come to us to help evaluate that. Typically, the number one most common explanation is the number of manual processes that are involved in populating the financial statements is incredibly time consuming, and it's labor intensive. I'm going to jump around this slide a little bit. You know, we're seeing in talking to these prospective clients and nonprofit organizations, we're seeing on top of the manual processes that the systems are not optimized or aligned. You know, in an environment of cloud-based tools, most of your tools have the ability to talk to each other when they're on cloud-based. Your CRM, your payroll system, banking information, AP systems, you know, they can all talk. Are you taking advantage of how the online tools are able to talk to each other, or are you still walking through a very, very manual process and getting the data into your accounting system? Manual report population. Again, we're seeing that financial statements, when produced, cannot be populated directly from the accounting system. What happens is the data needs to be exported, and they rely on Excel to do, you know, VLOOKUPs, pivot tables, etc., to produce a set of financial statements, which doesn't necessarily automatically tie back to the accounting system. Another issue we see is that there's limited visibility for the program staff. There's not a lot of collaboration during the month, and they don't have access to real-time financial data to be able to provide feedback or identify discrepancies during the month. A lot of times, the first time they're seeing the financial statements is at month end when the financial statements is published. We're seeing that programmatic staff are often running parallel reports in Excel where they're tracking their revenue and expenses. You know, and they're reporting this real time to leadership, this information. So we get financial statements that are misaligned with that. What happens is there's questions, reconciliations that need to be performed, revisions that need to be issued, and there's a lack of confidence in the monthly financial statements that are produced. Finally, financial reporting lacks programmatic details. At your organization, does your financial report equal an organizational balance sheet and income statement? Or is your income statement produced dynamically, where you have programmatic and functional reporting so that leaders can review the financial statements and make strategic decisions based on how the programs are performing? So those are some of the challenges. What are the solutions? Well, the first thing I would say is determine where your manual processes can be automated. Where is it that, you know, you are taking something, it takes 5 steps to do something where it possibly can take 1. A lot of organizations do things the way that they do because that's the way that they've always been done. So taking a fresh look at how is it that we're getting our information into the general ledger is step 1. Where possible, improve program level visibility by developing dashboards. Sometimes that's not possible in the systems you use, and not everyone on the program team has access to accounting systems to view dashboards. But find ways to get them information throughout the month. Collaborate during the month, incorporate check-ins. We want to validate the information contained in the financial statements before the financial statements are issued. Finally, on this slide, clarify ownership of the financial data in reporting. You're going to want to inventory and calendar out the tasks and responsibilities of the team in issuing financial statements, making sure that every task is properly owned, so nothing gets overlooked. Where there's information that is required that it's outside of the finance team, highlighting that and calendaring and inventorying that is also crucial. Clarify ownership of the CRM data. Who is in charge of populating and validating that information. Next slide. So in addition to determining where things might be manual and have the opportunity to be automated, we like to do what's called a financial diagnostic. And that's an evaluation of people, processes, and technology as it relates to the finance function. So when people walk in the door and say, why aren't my financials being issued in a timely manner, it's hard to make that call right off the bat, right? So going in there, doing a high level look at kind of the root causes of what is the most time consuming elements of your financial statement production is absolutely key. What are your financial reporting needs? What are the systems that you're using limiting that? When I mentioned that you are unable to produce financial statements directly from the system, what is driving that? Is it manipulation because the dimensions are inaccurate or needs to be updated? Moving on to your systems, is your accounting system meeting your needs? Does it have the dimensions and reporting capabilities that you need currently for your organization to generate these financial statements? How is your data organized in the chart of accounts? Do you have a 20-page chart of accounts? Is that really necessary? I like to think of things like travel expense. Do you really need 18 different travel categories in your chart of accounts? Conversely, maybe you only have one travel account, and every single month you're asked to break that down into 18 different categories. So you need to really make sure that your chart of accounts, the reporting dimensions, are in line with what your business needs are, what your current strategy is, and determining if the accounting system and the processes in place are the right ones for you. So what were the other items? Our survey, this one came in third, and that's financial strategy alignment with mission. In a mission-driven industry, the financial reports really need to go beyond the numbers. The finance team wears a number of hats. It's no longer just reporting financial results and saying, here's the budget versus actual. The finance team is expected to guide, to advise, and make sure that the financial statements are telling a story of the organization and the mission. Are your financials doing that? And we go back to the last challenge, and that was the dynamic financial statements. If you're just reporting on here's the organization as a whole, how is that describing and just the mission of the organization and highlighting its successes or needs? We want to make sure that financial statements are understandable for non-financial users and all stakeholders. I want to talk a little bit about budget, strategic budgeting. How does your organization budget? Is it purely driven by the finance function? Well, I agree that the budgeting process really needs to be driven, managed, overseen, organized, yes. However, it should not be your finance teams that are dictating how programs will execute the organization mission. This really needs to be a collaborative effort where everyone provides input and you create a budget to dictate what the organization's strategy is for the upcoming year. We want to evaluate ROI, not just in dollars. Goes back to the dynamic financial statements. You can't just evaluate the organization as a whole. You need to assess the programs and how they translate into the advancement of your mission. Finally, equip leadership with clear insights to give them to guide strategic decisions. What does that mean? That means getting them timely, error-free financial statements that have been vetted with your program staff so that they can make the relevant decisions of the organization. So the third strategic priority, which is the one that this group felt was the biggest challenge, is financial sustainability and revenue uncertainty. So we're going to show all of the items here. Diversify revenue streams. With the new administration, government shutdown, it leaves organizations vulnerable. And relying on one source of revenue too heavily, it could be a risk, right? So diversifying revenue wherever possible is recommended. That's exploring new funding avenues, new grant opportunities, new donors, donor types, untapped markets there, looking at sponsorships, webinars, training opportunities. It's not just about identifying these, which is going to be unique to each organization, but being able to equip yourselves to be adaptable and flexible to accommodate diversifying the revenue stream. Strengthening engagement with your constituents. Retention is just as important as acquisition, right? So you need to be able to assign value to your organization's accomplishments, to your constituents, your member base, your donor base, et cetera. How do you do that? Send impact statements out, communicate with your donors, the grantors, members, et cetera, to make sure that they understand the value that your organization brings and what the money that they're giving into your organization is doing. Lean on your CRM. That has a lot of information that you can target outreach based on information included there. We're going to want to do scenario-based budgeting, right? That's hope for the best, plan for the worst, everything in between. You can anticipate and prepare and respond to uncertainty. Forecasting is also important. Mid-year, quarterly forecasting, when information becomes more relevant based on, current circumstances, forecasting to see where we're going to land is a way to prepare yourselves for that uncertainty. Building and maintaining operational reserves. Operational reserves, this is our safety net. Do you have a reserve policy would be the first question that I would ask. Are you in compliance with that? When was the last time it was updated, if you do have one? Should it be reevaluated? We're going to want to set a goal and review it routinely to determine that it still remains adequate and adapt accordingly. When it comes to fundraising and bringing in money, emphasizing unrestricted funding is just smart. Unrestricted funding allows for spending flexibility and being able to address urgent needs or any opportunities that come up. And finally, regularly assessing financial health. This is not just, net income. Are we staying, in the black? This is about where do we have opportunities to increase our reserves or adjust our reserves? How are we meeting our KPIs? What does our cash flow look like? Is our financial statements showing any key indicators of something more substantial? For example, if your AR is not turning over, what are the issues there? Are invoices going out timely? Are invoices going to the right place? What is going on with our customers that our accounts receivable is not being paid? Regularly assess this health in ways other than just net income.
Thank you, Tracy. All right, let's move on. Second polling question. Which of these operational pressures represent the biggest challenge for your nonprofit organization? Is it technology modernization and integration? Is it internal controls and fraud risk? Or is it budgeting in uncertain economic conditions? We'll give you a second to consider which of those is the biggest challenge. All right. Interesting. Technology modernization and budgeting in uncertain economic conditions. I'm seeing a trend here between the first and the second poll. Thank you for that. Let's see what we see the most as the biggest issue. technology modernization and integration. Again, we're giving you a theme throughout this as well, and I think that's because this is where everything kind of starts. Next slide. Okay, so what are some of the issues? We've heard some already, so I'll just kind of walk through this. Parallel systems and data silos. We cannot have financial data that's being in two different places. You need to have one source for your accounting system and not having folks keeping their own accounting separately. That is going to result in inaccurate reconciliations and financial data. So if we can't rely on the technology, then we need to look at why not. Lack of integrations across platforms. I would say in the work that we do, this is critical. Those of us who are accountants aren't necessarily trained to understand all of the technology, but it is important, if not, that we bring somebody in or learn ourselves, because there is a tremendous amount of ability to integrate so that you're not taking from, say, your payroll system or your AP system and putting it into your accounting system. There should be some kind of syncing, which is also going to reduce errors. Manual process and duplication, we've been talking about that. That just results in taking longer period of time to get the financial statements out. And timely, accurate financial statements are what all of the constituents are going to want in your organization. Outdated AMS or ERP systems. Here, I just want to emphasize that if we do not have the programs within those CRM systems set up to get into accounting, this is probably the top issue that we see in terms of trying to get that data into the accounting system in a way that we can do our reporting. And then not having the AMS or ERP set up to be able to do that, or it's old, or we're not involving accounting to try to get that consistent. Inefficient workflows and reporting, super important. Do you have 10 steps? And maybe you should only have 2. You can still maintain controls, but are there ways to be more efficient? Technology modernization solutions. Tracy touched on this. Conduct a systems assessment to identify gaps, redundancies, and integration opportunities. While we go in and we do people, process, and technology diagnostics, here is where it's a deeper dive into your accounting system. Chart of accounts, what's redundant, how do we integrate? Those are super important. Developing a roadmap for identified system upgrades. We can't do it all. What's our priority? And the I don't have time to do this. By doing a roadmap, making the necessary changes, you are going to set yourself up for the future, to save yourself time later on that you can spend doing other things strategically and not data entry. So automating repetitive finance tasks. Hopefully, most of you are not writing manual checks, but even if you're doing ACH, is it talking to your accounting system? Likely not. There are a lot of great opportunities to automate a lot of repetitive tasks these days, and cloud-based tools that support collaboration and real-time access. Those folks that we've been talking about previously that need access to data and can go in and get it on their own, not wait for finance and accounting to feed it to them. If everything's set up right and with the right internal controls, that means everybody during the month is working to review what's going into the accounting system to see if it's appropriate or not. All right, budgeting and uncertain economic conditions. Let's go over the other 2 that were not on our top of the list. Here's some issues that we see. Taking last year's budget, adding some percentage, and coming up with a new budget. There should be a very significant thought process in doing your budget, and that means you have to start early. thinking strategically about what your organization wants to achieve, not just what needs to be spent. Where do we want to spend our money? Why do we want to spend it? What is the board's objective and what do they want to achieve? Then you turn around and build your budget. Tracy mentioned this already. Plan for the unexpected and build in flexibility for rising costs and new priorities. Change is going to happen. The unexpected is going to happen. Build in some cushion for that. Or you may be, result in being behind budget. Scenario planning, especially these days, and with what's happened with the federal government, those of us who have seen federal funding go away or be reduced have had to stop in the middle of operating under a board approved budget and do scenario planning. So our firm is doing a lot of helping out with organizations who unfortunately were impacted with that. What can we expect? What happens, if the worst case does happen? And involve the right people early. Your financial folks should not be solely responsible for creating the budget. It should be the people who are going to be held responsible for managing the budget. So if there is a conference, your conference folks should be involved in coming up with the budget. Same for every other department, your grants and whatnot. Yes, it's going to roll up. Finance is going to oversee it. Your COO, if you have one, and CEO are going to be involved, but it should be a very collaborative effort. Hard to get folks to buy in if it's not. And lastly, for this section, internal controls and fraud risk. Accounting policies and procedures manual. We understand this is a pain to do. It usually falls to the lowest of the priority list. But when you have turnover, when you are trying to hold everybody accountable to follow a certain set of policies, it is highly important that this continue to be updated and revisited. And you can bring consultants in to help if you just don't have the hours in the day to do it. Strengthening IT and cybersecurity controls. And one of the other ones here is a risk assessment. Very important these days to prevent fraud. The fraudsters are out there. We see it all the time. It doesn't have to be super extensive, but it is important to have some sort of assessment in both of these areas. Because when something does happen, it takes the resources of everybody else and the focus away from what you want to do on a day-to-day. Regularly reconcile accounts. You should be doing monthly reconciliations of all or at least your significant balance sheet statement of financial position accounts. It's how you're going to catch errors. If you do it quarterly or if you don't do it on an accrual basis, it's much harder to catch, and then you're playing catch up or cleanup. And evaluating the approval process and the segregation of duties. Segregation of duties is critical, but sometimes we see that there's way too many points in the approval process when there doesn't need to be. And when you have automation and technology working for you, you might not have to go through as many steps as you think you do. Regular staff training and awareness programs, again, very critical, especially when you're talking technology. You may have had new staff that aren't used to using it or following the current processes. It's very important to train them on the why and the how, so we don't go backwards and start doing things manually.
All right, ready to go to polling question number 3. We're into round 3 already. Which of these 3 challenges is most important for your nonprofit when it comes to positioning for the future? Is it investment management and reserve strategy, rising audit, compliance, and regulatory burden, or talent shortages and staff turnover? Please vote here. We're going to leave this up for about 45 seconds. Just barely edging it out. The biggest challenge we have from this group is talent shortages and staff turnover, followed very closely by investment management and reserve strategy, and finally rising audit compliance and regulatory burden. So what does our survey say? and that is talent shortages and staff turnover. So we were absolutely aligned here. So why do these, why does talent shortages and staff turnover pose such a challenge when we're positioning for your organization's future? It's an incredibly competitive job market out there right now, especially in the finance function. On top of that, when you add in the specialized skill of nonprofit, that's necessary for performing on a finance team of a nonprofit organization. Then you add in the fact that nonprofits can often compete on salary alone. Attracting and retaining talent becomes a challenge. Think, as most of you are probably aware, budget constraints limit team sizes, and smaller team sizes mean you have to prioritize all the tasks on your team's plate, which can be plentiful with competing priorities. We just walked through so many areas today that the teams are being pulled in, so many things they're asking, finance teams are being asked to do. Enhance controls, increase transparency, collaborate with program staff, manage strategy, cover compliance and regulatory demands. It leaves teams overwhelmed, which can often lead to high turnover, which disrupts our continuity. And it's even more challenging to bring on and onboard and train new team members. Limited expertise for regulatory demands. There's an increase in regulatory demands, and some teams don't have the depth in place to keep or properly train team members. So how is it that we can address these issues? Next slide. So I would say first, assess your team's capacity. What are the job descriptions? What are the current responsibilities? Where are their knowledge gaps, and where's training necessary? I talked before about inventorying all of your tasks, making sure that they're right aligned with the team members assigned to them. Automate, streamline, find ways to simplify your accounting by having systems talk to each other. Look for things like online bill pay or expense reimbursement, making sure your cloud-based systems are speaking to each other. This will save time, save energy, and build in some capacity for your team members. Jeanette mentioned accounting policies and procedures manual. Do you have accounting and policies and procedures manual? When was the last time it was updated? This is incredibly important. Invest in SOPs if you don't have those in place. Cross-train your team members so that if there is turnover, there's minimal disruption, and any new team member that's onboarded can be quickly trained on the tasks. Consider outsourcing or fractional support. This gives you, leverage teams with technical experts, subject matter experts that can really elevate your finance function without the overhead. If you are bringing talent in-house, consider utilization of recruiting firms. You want to attract the top talent based on your organization's specific needs, and sometimes utilizing recruiting firms can help you specifically identify those easier. Okay, so what about the other challenges for prioritizing for the future? Next slide. And that's rising audit compliance and regulatory burden. The biggest offense in going up against audit compliance and regulations is a robust accounting system. A well-designed accounting system can track expenses by donor, grant, contract, programs. And when you have a sound accounting system, there's less risk for human error, and data integrity can be ensured when reports and processes are automated. So evaluate your accounting system. Are you able to report on the different programmatic functions, grant functions, donor functions that are being audited or where you need to support. Stay current on your regulatory changes. That is, they happen frequently. You need to make sure your team members stay informed, sign up for CPE, similar to this, review literature, etc., to make sure that you understand the consequences and the impact to your organization. When necessary, engage external resources. Know when to call in the troops because it's can we go back? Yeah, almost done here. Know when to call in the troops because it's exhausting too many internal resources. ASC 842 and ASC 606 is a prime example of, we had a number of organizations reach out to us because they might have had the expertise, they just didn't have the time. We talked about conflicting priorities. So it is often easier to go to an outside resource to help you implement any new regulatory requirements, but also develop plans going forward, help you establish checklists, help you prepare for an audit and be audit ready with reconciliations. So sometimes those can be time savers. And also develop internal tools and checklists. So these checklists that address compliance requirements can be put in place even for those that are less knowledgeable, so compliance is maintained, but have those in place so that you stay compliant without even realizing that people are asking to be compliant. Now we can go to the next slide. Investment management and reserve strategy. So, this is, how is it that we balance liquidity and long-term growth? How do we maintain enough liquid assets to meet our short-term obligations while also investing in long-term growth? How is it that we go about doing that? First, I would ask, do you have an investment policy? Do you have an investment committee? Do you routinely meet with your investment advisor to discuss your goals, to discuss these goals? Regularly reviewing investment returns and debt strategy to make sure you're making decisions more favorable to your organization as it relates to things like line of credit or pulling down from reserves. And finally, I'm going to bring up the reserve policy again. We talked about this before. Do you have a reserve policy? Has it been updated recently? I think there was a lot of criticism, post-COVID in the reserve policies that were in place where they just were not satisfactory or kind of overlooked. So do we have enough in reserve to handle any future potential disruptions or uncertainties?
Okay, we're in round 4, bonus round, last one. Which of these represent the biggest challenge, do you think, for your organization? Is it cost allocation and overhead management, cash flow volatility, or grants management compliance? All right, see. Ooh, pretty even. This is good because we would say it's all of the above. So there was no specific answer here, and I think the polling results have basically shown that. Lots of challenges here. All right, let's look at why and what we can do about them. Let's start with cost allocation and overhead management. We have a lot of some organizations have a lot of different grants, funding streams. Allocating those costs can be difficult and challenging, not only in the accounting system, we see a lot of folks doing it outside of the accounting system, but that there's lack of formal, consistent methodologies for allocating the indirect costs. You have to have a methodology, go back to documenting in the accounting manual, and then depending on the donor and funder, as I said, there are various cost allocations allowable whether it's a federal government or it's private donors, private foundations. There's pressure to underreport or minimize overhead. It's interesting because we all need to have overhead costs. We need potentially rent and accounting and all of those functions, IT, that affect and are required for every single program of your organization. But the idea is let's get the percentage as low as possible. You need to make sure that in doing that, you're really truly looking at those costs and determining, can we get them to be direct program versus indirect, and that will help. And we'll talk a little bit about that. Limited staff and technology makes it hard to track, allocate, and report costs. And again, we would plug what we've been saying all of this session is that with the right module or processes in an accounting system and the right accounting system, this can be automated. And some solutions. Cost allocation plan that can comply with grantor and regulatory environments. You can allocate across the board, but what you get reimbursed may be very different. And having a plan and a system that can track that can take the difficult process of managing this off of you. Educate stakeholders on the importance of overhead. It's often misunderstood by donors and stakeholders. It's not a bad thing, and it needs to be educated as to why it's not a bad thing. These are no different than direct costs. They are required for successful programs to run. Again, leveraging technology to automate it. I've talked about advocating for grants and contracts to cover both direct and indirect costs. Negotiating fair overhead rates when possible. Make sure whoever is advocating and going and securing grants and contracts that have the education as to why this is important and how to build it in, so that they're not just saying, oh, great, we got this $20,000 grant, but if we don't have the indirect or G&A to support it, then we really have a loss on that grant. So the education there is super important. And reviewing and regularly updating the methods to ensure that they're effective. What is our allocation base? Are we in compliance? Very important. Next slide. And in the interest of time, we're going to run, let's see, I think we have a couple minutes left. Cash flow volatility, very important. If you have cash flow issues, just the basic reporting isn't enough. You should have cash flow management, cash flow statement that is going to show and map out on a monthly, at least a monthly basis, where are our receipts coming in, our grants, our event revenue, and matching that up to expenses so that we can monitor when we would need to pull from reserves or to operate or to focus on a line of credit. Delayed payment from sponsors, this second bullet, very important. You have everything running great, but you're not chasing after collecting your receivables. This is super important. You may have a great looking balance sheet, but if it's all sitting in uncollectible receivables, that is a problem. Make sure including unpredictable expenses in cash flow management is being taken into account. And limited reserves increase vulnerability to shortfalls. So going back to earlier discussion on reserves is an important one to have. And then cash flow gaps do impact program delivery and vendor relationships. Next slide. And I've discussed some of these in my previous slide. A couple additional diversifying income streams to get smooth revenue is important. Strengthen your receivables management. And when you're doing cash flow management, things like salaries and fringe benefits are evenly due throughout the year. Make sure that we're aligning those expenses when the revenue is received to the extent possible, which an example would be conference expenses. Grants management. We all know if we're getting federal awards, let alone other non-federal streams, these are difficult to manage, complex, need to be educated. Restricted funding needs to be tracked so that you can do grant invoicing and compliance and reporting properly. There's a lot of documentation that's required. So this is an important area to have very well documented policies Because if you are not doing all of this, you risk non-compliance and losing funding or not being able to get future funding. You need to be able to coordinate on a monthly basis and upfront when you get grants on what needs to happen in order to manage these effectively. And here's some solutions. Centralizing grant tracking. If you have a significant amount of grants, you may need centralized grant tracking. Again, standardizing policies, regular training is super important because the rules change and the grants change and the funders change the rules. Collaborating across departments. I can't tell you how important this is, meeting monthly and collaborating. Accounting and development talk differently to one another, so you got to get together. If you don't, you're going to have a problem later down the line. And conducting internal reviews.
Great. So what was your final score and what did we learn? As financial professionals, it's more than just the numbers. And with it, when it comes to not-for-profit, and you have to focus on strategic alignment. Need to emphasize strategy and mission advancement where in financials to tell your story. Modernize, optimize, and it will save time and efficiency. Adopt scenario planning, have established resources, reserves, cross-train, document staff roles, and the bonus issues are no longer optional, they are essential.
I'm just going to let you read this slide here. I think we've said a lot of these things over and over again during this presentation, and I hope you all have enjoyed it. That brings us to the end of our first session. If you have any questions or would like to keep the conversation going, and we're going to put up a polling question for you to answer, number 5, feel free to reach out to either of us at any time. Up next at 11, so we have a few minutes, we will dive into our next CPE session, which is navigating grants compliance, strategies for success in today's regulatory environment. If you haven't registered for the next session yet, please check the chat. We posted a link to the registration page. And before you leave, we do appreciate the feedback. Quick survey will pop up automatically once you leave the session. And again, the recordings and presentations will be available in about a week. And thank you so much.
Thanks, everybody.